Afternoon. How are we all doing? As Mr. Wick says, and as Steve said, don't be a bum. Hit that thumb. Afternoon. How is everybody? Afternoon, Steve. Hit that like button on your way in. It will lube up your entry and make your time here warm and fuzzy. Not sure what to say about that. Afternoon, Evil. Danny, Monkey, Philip, Fletch, Crumb, Callum, Amy, Baggy, Brian. Afternoon, Callum. Yeah, so hit the thumb. So yeah, basically we got nothing much on today, news-wise. Bit of rubbish. Wasn't expecting Mr. Wick. Haven't seen him for a while. Afternoon, FT.net. Jeremy. So yeah, we had claimant counts for the pound this morning, which was quite a bit higher than forecast. So the pound this morning, wrong terminal. The pound this morning had a big sort of drop. That's the news spike there. So we had that big spike on the news, and then it completely collapsed. Well, actually, that's not strictly true. It hasn't really completely collapsed. But it's not really done much at all. So we've got a bit of a rally going on with the pound at the moment. Obviously, the news was negative, but it hasn't had much impact. The euro, however, today, not having a good day at all, as you can see. Everything's lit up like a Christmas tree here. I think this is still fallout from the election debacle over the weekend. So the market really not happy with the euro again today. Second day on the trot, basically. So euro pound obviously rallied off the back of that news. They had put a spike in, and then obviously euro has collapsed. So this is kind of the perfect storm today. 175 ADR on the euro pound. I've done 2 drawdown controls today on the euro pound long that I've got on. So still looking for the gap fill though. So I will actually need to put a TP on that order that got in today. So I'm looking to get out on the gap fill. I might get out before that. I'll see what happens where we are and when news comes out. But that's the logical spot for a TP at the moment. So there's a few ADRs. Ryan, thank you for the £5. Let's make some money. Let's do it. Thank you very much. Much appreciated. What can I buy with my £5? Some deodorant. I've got a really itchy armpit today. There you go. Afternoon, Jeremy. Brian, I'm suddenly turned on for some reason. No, gonna get involved in that one. Afternoon, Virginia. Steve's fault. So ADRs today. What's the time? We've got 7 minutes to the open. ADRs today. We got euro pound, obviously 175 ADR. So I think the euro was a good mean reversion opportunity yesterday. Euro pound looks very good now. Euro CAD. Sorry, not Euro CAD. Euro odd is ADR as well. We've had a hit to the downside. We had an ADR on that yesterday as well. So big down days on these. Euro New Zealand has also hit ADR today. So good mean reversion opportunity there. Pound odd and pound CAD. So pound odd has hit ADR just about. It's just come off of ADR and reversed nicely there. So 5-minute reversal working well on that one. And pound CAD. So that is just triggered. I'm short on that at the moment. Again, 2 drawdown controls done. One of these is an aggressive drawdown control and a normal drawdown control today. And obviously, because it hit my stops, or rather my drawdown control levels, as soon as it took out, look at that. You can't really get much more accurate, can you? Drawdown control. Run away. So so out of a bit more of that, but I had another position on this morning. So ADRs there. There's a few RSIs to look at as well. We've got Euro Swiss extended on the 4 hour. That's really loud. So Euro Swiss extended on the 4 hour. Euro not having a good day. Swiss francs obviously had a really good couple of weeks, and the euro is now having a bad one off the back of it. So this is still extended and embedded. Beautiful divergence here. Bullish, lovely big propulsion gaps to the upside. It's completely collapsed straight through the 24, straight through the 72. Absolutely falling through the floor at the moment, this euro. Euro pound extended to the downside, massive extension on that, and obviously the gap fill play is there, so there's a good chance we're going to get the gap done. That's also extended on the hourly, and you've got euro, US dollar as well, extended on the hourly. I've got one entry taken on that one yesterday because it was an H1 RSI extension and gap fill play, and I will be taking another if it drops any further today, but I'm looking for it to come back up into that propulsion as well on the euro US. Obviously that's FOMC tomorrow, which will hopefully move that. And US dollar CAD extended to the upside on the 4 hour. So short on that one. 2 entries on that, one from last week, one taken yesterday, and looking for a target back down there. This is really range bound at the moment. It's come straight off the monthly high. Yeah, so we hit that, rejected, limit orders triggered at the monthly high. We tested it again this morning, and they're retesting it now. So if you look on the hourly chart, just invalidated it, haven't we? Yeah. So we had a reversal alert this morning on that there. Sorry, yesterday, which has literally just been invalidated this morning off of that monthly high. So when you get a second reversal alert today, it's going to be pretty much the same spot as yesterday, and that will be your M pattern. Come back down into that propulsion. Hopefully, we'll see what happens. So those are your RSIs and ADRs. News-wise, obviously, there's nothing else today. We've got the 10-year bonds, which might do something later. Overnight news, not a lot. Not a lot at all, really. So, yeah, nothing much today either when you get past all the blue crap. We've had Rain been speaking today. Seems to be an awful lot of talk from the ECB over the last few days about pulling back on these rate drops, which will make the euro a little bit more neutral to bullish. So I think we need to wait and see what the CPI numbers are, but it doesn't seem like they're very aggressive about dropping interest rates at the moment, ECB. So hence why we didn't get a massive collapse on it last week when they changed the rates. Lane speaking again, high level of uncertainty still. So it's all we're not too sure about dropping rates at the minute. Oil news there. But apart from that, nothing much else today. Say it's a no news day today. So going to have a look at the US indices today. Surprised the gap fill hasn't occurred. Been hesitant on pulling shorts over the last 2 days. Yeah, gaps tend to get filled, but they get filled whenever they get filled. So gaps don't get filled the same day a lot of the time. The statistics on indices, when you get gaps on indices, the statistics on indices for gap fills same day are roughly 50%. Yeah, some days they will just do it straight away. Other days they won't, and it will run away for a week and then come back and do the gap fill a week, maybe 2 weeks later. So it's unusual these days to get gaps in FX. It takes something quite dramatic to cause a gap. We used to get them all the time. 10 years ago, gaps were everywhere. Everyone was scared about holding stuff over weekends because of gaps. We just don't get them anymore. They're very rare. So, and if we do get them, they tend to be broker spread and they fill within an hour or so. So it's an anomaly that in the FX world, but could get filled. Very rare you don't, because this is what they call unfinished business. So there are institutions offsided by this gap. They will drive the price back to complete their business and level the books at those levels, usually. Sometimes they get caught offside and they just cannot keep the momentum and they will just exit those positions and flip. And that's where you take the losses, basically. So it's unusual, very unusual. Banks and institutions have got a lot of power. They can move this money, this market, wherever they want it to go. So market's just opened. Dow. Really? Okay, so Dow TP hit. Clean break straight down to TP. I'm targeting just over 1R at the moment on the indices. So nice clean break on the SIH strategy. No trades on S&P or NASDAQ pre-market because the ranges are too small. But yes, lovely clean break on the Dow. Straight down, money in the bank. That's what we like. Afternoon, Jurich. Not sure if it would affect MT4, but the CME and Rhythmic have been reporting global freezes on data. It shouldn't affect CFDs. Well, I say it shouldn't affect CFDs, but Jesus, look at the Dow. Market's melting. This US dollar's probably rallying today. Bit of a spike on the US, becoming down against the pound. So a bit of a spike on the US at the open. Yeah, so it depends. Basically, broker CFDs are obviously completely different to futures, but they do work off of futures price action. So there is an argument for there could be interruption, but wouldn't think so. Afternoon, Mimo. So FX wise, there's not really much else to look at today. All the RSI extensions, obviously, we've gone through very quickly at the beginning. There's not a lot going on these. I'm going to go through all the FX pairs in more detail tomorrow. If there's any FX pairs you want to look at, though, let me know. And I will look at them. I might just lock some profit in on that. Seeing as I've got some DD control to get back. Might stick a trailer on it, actually. So Dow clean break to the downside. 3R from the opening range is basically that low, which is within target today, within reach. Wow, this is look at this complete divergence on the S&P and the NASDAQ this afternoon. It's been doing this a bit, I've noticed, over the last few weeks, going completely in opposite directions. This Dow struggling down here. We've got an iceberg which is eating up all the shorts in that propulsion gap. Just getting stuck. There doesn't seem to be able to get through that. Nah, it's getting stalled, isn't it? I'm taking that, I think. Oh. Okay. So 3R at the break on the Dow. Nice and easy today. Okay, so NASDAQ, I'm long. So the initial 5-minute opening range there. Triggered along. No trade on the S&P. Short on the S&P by the looks of things. Might get a hedge on one of these, I think, today. Here we go. Strong US. DAX. DAX was this morning. Don't trade the DAX in the afternoon. Pound yen. So yen pairs still going. So all the yen pairs, basically, we are stuck. We're totally stuck now. So Aussie dollar yen hit that high. CAD yen, same, hit Friday's high. Swiss yen just about broke out from Thursday, Friday high. Euro yen stuck. Yeah, so they're all stuck. So there's a little bit of strength coming through during the London session, weak Asian session, but not going anywhere. None of these yens are going anywhere. Yeah, so we're totally stuck. And there is no reason for anything to move on this until this Friday, because until we get that Bank of Japan announcement on interest rates on Friday, this thing could go absolutely anywhere. The market is waiting to see what the BOJ do with these interest rates on Friday and what the press conference says their forward guidance is going to be on interest rates and how they're going to get themselves out of this hole. Because at the moment, it's a carry trade. The market just wants to long it to make money because you get positive swaps. In theory, though, the Japanese are doing everything in their power to drive this south, drive everything south and power up the yen. So it's an almost impossible situation for the Japanese at the moment because they're trying to fight the US. And at the moment, that US is pushing interest rates back further. If that, on Wednesday, FOMC is going to come out and the interest rates aren't going to change. If the Fed says on Wednesday, it ain't working, we are not getting on top of this CPI number, and it looks like it's powering up. We've got CPI being released, obviously, as well. There's a good chance we're not going to be able to drop those interest rates. The US dollar is going to rally. If they don't change their interest rates on Friday, that US dollar yen is going to do nothing but go up. Then the question is, have we got another intervention in us? So it's impossible situation to analyze from a fundamental perspective at the moment. So I have no idea. So pound yen will do whatever the yen does. If the yen powers up and they intervene, it's going down. If the US rallies against the yen, so will the pound. But right now, the intervention level is holding. So it's a really good technical short based on that. But so was the New Zealand dollar yen. Yeah. Looked like that was holding as well. It didn't. So that is still holding, but holding high. You look at the price action on these two, yeah. Look at the price action here. Yeah, so it went basically high, double top, triple top, lower high, lower high. Pound yen, high, double top, lower high, lower high. Yeah, so there is definitely strength over the last 2 weeks holding. They are holding that yen. Not going through. But if the US dollar rallies on Wednesday, nothing's going to stop it apart from the Japanese intervening. So I have no clue. Hornalls. Euro Swiss. Let me just quickly check. Indices. So just about to get in the S&P. S&P can't get out of its opening range at the moment. Nasdaq's pulled back into the opening range. Can't seem to trigger a trade on that. Euro Swiss, at the moment, I'm not in Euro Swiss. I'm not in any Swiss. This one basically, obviously the euro is weakening dramatically at the moment. You've got this double bottom from that spike on the news there, which is the top of this propulsion gap. Sorry, the top of this accumulation. Need to go out to the 4 hour to see it. So this accumulation here, that is kind of that. as a sort of range, if you like. We broke out and we didn't look back. That's basically what we've just come and retested, this level where we bought from back in March. So I suspect if we get there, 150 ADR, you'll get a bounce back up from here. It's come down so fast through those moving averages. If you look at, when price does this, so a little bit like there, you will usually get a pullback on that leg as market structure shifts back the other way. So it's the end of that buy cycle, basically. It looks like they're going to start to sell, which is correct. Euro have dropped their interest rates. They've also got massive political problems, which is going to devalue the euro in France, that is. So I suspect something like that. So at the moment, it's a great looking long, lovely divergence. We're looking for a push up to test the 20 moving average, something like that. So if you got in on an H1M5 mean reversion, you'd have been in from there somewhere. You probably wouldn't have got out on that. So you'd be just scaled in, wouldn't you? ADR 57. So you're being 1, 2, probably getting into 4, possibly 5 positions here. Average would be somewhere around 150 to 175 ADR. So you're looking for a 50% retracement. That gets you out with a nice profit. 38 retracement, get you out roughly break even. But I think the way this is dropping today, the euro, I think there's a good chance this might come down and test this. If you look at the news this week, it's all US based. The entire week revolves around the US dollar. So we've got CPI tomorrow afternoon, FOMC tomorrow evening. We've got Macklem speaking, which will affect the US. Got a little bit of Aussie in there. Then we've got the PPI on Thursday, and then we go into the yen with University of Michigan. There is no euro news this week. So that cascade that we've had, which is the euro getting ready to drop the euro rates actually dropping here, which did nothing. And then obviously that collapse of the French Parliament over the weekend. Yes, there's no reason for it to be bullish, but they will undo this. They'll be nicely in profit on this. So at some point they will unravel it. The danger we've got is they just do a gap fill and run, which is the danger with all these euros at the moment. When you get the gap fill, quite often the market will reverse from it. So gap fill's the right play. 175 ADR starting to change direction now. Just got a reversal alert. So look for a retest and off we go, hopefully. Short on the S&P. Nasdaq stuck fast. Imagine taking 1% risk over one ADR on a prop account, but only having one position on at a time. On 80-20 extensions. On the 4-hour, you mean? Or the hourly, really, with 80-20, yeah. Imagine doing that. That's what I'm doing. I'm a little bit exposed to the euro at the moment, but had four long signals trigger this morning. Euro CAD, Euro Swiss, Euro Pound, and Euro US all extended RSI 2s on the daily. So I was already in one of them, Euro US dollar. I was already in Euro US dollar. So I took a Euro Pound and a Euro CAD. I didn't take the Euro Swiss. The Euro Pound is also extended on the 4-hour RSI as well. So yeah, I'm quite exposed long on the euro at the moment on the account, but I'm not that worried. If you look at the Euro CAD where it is at the moment, nice rejection point there. Just realised I haven't got TP on that. Afternoon ago, sir. Pound New Zealand. $4R or pretty much $5R on Dow at the look at that, 20 minutes, $5R from the opening range. That's big move on the Dow today. Big move. Got out way too early on that. Pound New Zealand. So Pound New Zealand got one short on at the moment, looking for a propulsion gap fill. Out belongs on Friday. So exited on Friday on the new spike on non-farm payroll and flipped short. So looking for that gap fill there, basically. Again, no news this week on the pound. So there's just literally no catalysts for the pound apart from what we had this morning from the not this morning, sorry, from the oh yeah, no, there is this GDP tomorrow, actually. Tell a lie. Got GDP tomorrow for the pound. So that could also trigger it. We're forecasting to go down to recession levels month on month, which may or may not do, but we'll see. But that claimant count this morning obviously was a big negative, and it didn't work. So as you can see, it's just back. It's actually up on the day at the moment. So no news. So yeah, I'm just looking for a push back down into there, basically, and to see if they buy out of that. I'm just going to move my TP up ever so slightly. I hate, it's just a personal thing. I hate having my TP below halfway on the propulsion gap. Yeah, so I have seen, I don't know why, don't know the logic behind it, but I have seen so many times the market hit 50% of these propulsion gaps and bounce, and not actually fill the gap. And having my TP, first of all, it's 125 ADR where my TP was. Secondly, it's below halfway on the propulsion gap. Just for the difference between that amount of money and that amount of money, it's just more comfortable being there. So I don't know why. But yeah, above propulsion. Above halfway on the propulsion. So that's also a weekly low. But yeah, pound New Zealand. So total stuck. That was for ages. Got into that 1st of May. So it's a month, over a month. Nothing. So at the moment, it's a lovely double top off of that high, which is the high from 2 weeks ago. Also happens to be monthly low from April. Excuse me. I've been doing data analysis today. It bores the crap out of me. Nothing like going through, what's 16 times 28? Whatever that is. That many results. That's how many I've been through today. 16,000 times 28. Eyeballs are like that. So yeah, I'm short at the moment. So bias on the pound is nothing much at the moment. The bias on the New Zealand dollar is long. So pound, we will be dropping interest rates along with the euro. So we will be getting more bearish on the pound. So the bias pound New Zealand's coming into being short. So much more interested in shorts than longs. So like the look of that. That's where I'm going conservative. But if you want to be aggressive and you assume that we are shorting right down to these levels when we start to drop those interest rates, you could go way beyond the low of last week. So you can have a much stronger target down at those lows or below or beyond. Afternoon, David. S&P target hit. What for banked? 6, 7, 8. I'm going to take the S&P. So that's 4, 5, 6, 700 banked, 318 hedge. So that's easy. That's hedged. So with the NASDAQ, look at the hourly. Tricky. So NASDAQ at the moment, we've got the range high lows there from Friday. So downside target is that range low. We got yesterday's low in between. So if it does break down, we might get a bounce out of yesterday's low. If not, it'll be the low of Friday. If the low of Friday breaks, it's a big old flush back down into this propulsion gap at 150 ADR. So it's quite a tricky one today. Upside, it's a bit too close to get out at Friday's high. So I'm just going to leave it to run. That's 3R basically. In fact, what I'm going to do with my upside target is move it up to ADR in case it goes long, because I've got the profit locked in. So I can just absorb that hedge with the profit today. So nice clean breaks on 2 today. That's what we want. Get 2 clean breaks and 1 hedge. You're guaranteed to make money. Good day. And that's bouncing straight off of ADR as well, look, on the Dow. So that is the average movement for the day on the Dow done today. God, this is not in order at all. Okay. Anybody got any other pairs they want to look at? There's not a lot else to talk about today, really. It's a no news day today. So we've had the news. The only thing really moving today is the euro, off the back of the bad euro situation, or rather the French electoral situation. So it's highly probable this will bounce. There you go, it's bouncing now. But whether or not it gets stuck at the gap and the market wants to hold it at that level, or whether it pushes through, we'll have to wait and see. So, but apart from that, as you can see by RSI and ADR, nothing much else moving today. It's all about the euro. A little bit of pound, but those have all kind of played out. It's just whipsawing the pound at the moment. Watch that propulsion gap for potential long. I'm long on the DAX. Should be trading the US indices in the afternoon, not the European. RSI 2 testing. I'll go for that in a minute. Aussie dollar Swiss. Going nowhere. Stuck. This Aussie dollar Swiss, all the Swiss franc pairs at the moment are a bit tricky. We've had this big, strong push. Nothing for a week. And you've got this big old news spike, which was completely undone here, which caused that monthly low. That was a safe haven run, basically, which was not actually required. So that 175 ADR to the downside, I suspect, is probably going to be the low, somewhere around there, 150 to 175 today. But it could well be just bouncing from where it is now. It's very difficult, the Swiss at the moment. I've completely stepped out of the Swiss for the minute because I want to see what they do with their interest rates. And the yen, obviously, I have no idea what's going on with the yen. But the Swiss at the moment is getting back to its good old crazy loony moves at the moment. So I'm just kind of steering clear of it. Where we are now is potentially a 50% retracement. Australian dollar and New Zealand dollar, both longs. They're not dropping interest rates. Their inflation is still too high. There's no reason for the Aussie or the New Zealand to be bearish against anything, because they're going to be the last ones to drop their interest rates. So everything else should drop against those two. But they are both commodity pairs. They are affected an awful lot by commodity prices. And if they start to drop dramatically, so will they. So difficult one to call at the moment. If you're long on this from there, same as the Euro Swiss that I just went through, you're probably in 3, maybe 4 positions on it. So you're just looking for a pullback into propulsion. But you need to be aware that it could come and retest those lows. I doubt it will get all the way down there without some kind of pullback. Just longs at the moment. It's nicely extended to the downside. You've got divergence backing it up as well. So we're making lower lows on lower relative strength. Bullish up into those areas, I think, if it can get there. Am I back on prop? I am. Only temporarily, because I'm bored. I just basically wanted to try out the RSI 2 strategy on prop to see how it did. Nothing like forward testing it with somebody else's money, basically. That's all I'm doing. So yeah, so just decided to do an FOMC, an FTMO evaluation. Literally just using daily RSI 2, 4-hour RSI 10, and H1 RSI 21, but using 90-10, 80-20, and 90-10. The big extensions, basically. So 4-hour RSI, 80-20 is brilliant. Hourly RSI, 90-10, brilliant. 2 RSI on the daily, 90-10, brilliant. So 3 different time frames, but the big extensions, yeah, the very high strike rate extensions. RSI 2, I'm getting, I haven't got that testing open. I've been doing testing for, I don't know what to call him, friend, colleague, acquaintance I've met through trading who's setting up a new website. And I'm doing a load of RSI analysis for him, basically, and backtesting and data crunching, robustness testing, out of sample testing, doing all sorts of testing on the strategy that he uses, just to confirm the results, basically, and compile the results, more importantly, so he can put them on the website. And that's all RSI2 stuff. So that's why I thought, while I'm compiling it, I will stick it on an evaluation, yeah, and just live trade it, just to make sure that what I'm finding in my results is really what I'm seeing on a day-to-day basis. And the strike rate is 82% with his strategy, the way that he trades it, which is very high, yeah, but it's high because it has a negative R return. Yeah, so the actual return risk reward ratio is negative. Yeah, so everybody tells you if you're going to risk 1, you need to make 1.5, otherwise the strategy won't work. I don't know why they came up with that scenario, but if you're going to a very tight mean reversion, if you're risking 1, you need to make at least 1.15, so that this is higher than that. Otherwise, it won't make money. It will make money if you have a negative risk reward, if your strike rate is high enough. So, how does he trade it? I can't tell you. That would have to kill you, AZ. I can't tell you at the moment. Because he's looking to monetize it. So, it's it's a mean reversion strategy. But like all people that make money, they don't do it the same way as everybody else. Yeah, I don't trade the same way as everybody else. So I make money most of the time. He comes from a banking background. He's trading how they used to do it in the banks, basically, but he hasn't got the facility to move the market. But because he comes from a banking background, he knows how they move the market. So he knows a little bit more what to look for, but he also doesn't know when. And that's the important thing, which is kind of backs up everything I say. You can be as good as you like at technical analysis. You can never, ever, ever, ever time the market because the market is random. But the market does a certain thing most of the time before it does something else. And knowing how institutions make money and what they do when things go wrong helps you understand more what you see on the chart. And it's interesting as well that he comes from a background that someone else developed a strategy on that wasn't in banking that matches the way that it moves. And it just goes to show you it is all about identifying patterns in the market and price action. But everybody teaches you to do it in a very, very strict manner. He is not a very strict trader. He is a case of, there's a grand, I'll have that type thing. Oh, it's gone 3 ADR against me. It'll come back type thing. Very loose, fast. But it works because it's not restricted. So, but let me give you a hint. If you used RSI 2 and you weren't worried about making a positive risk reward ratio and you let your trades run, you know, more than maybe they move on average in a day. Whenever you saw some green, you took it. Wouldn't be far off. Thoughts on getting out of CAD positions. I haven't forgotten about the RSI 2 testing. Thoughts on getting out of CAD positions before US CPI and FOMC tomorrow? CAD? Well, you've got CAD. Macklem speaking. The CAD will get moved with the US tomorrow, but it won't move as much. This tomorrow it's going to be very difficult tomorrow to trade this because if that comes out radically different, the market is either going to crap itself and unwind or dump or pump into trades, or they're going to wait and see what Powell says. You're not going to know until that hits what they're going to do. And you're not going to know how that's going to affect the CAD either. CAD, I wouldn't worry too much about. US dollar could turn tail tomorrow. I don't think it will. Do you know how many, I mean, well, you obviously do if you've been in here for a while with me, but how many times have I come in here and said, this is possibly the most important news event we've had for months? Every time I've said that, we haven't gone anywhere. Yeah. The entire world is waiting to see what inflation is for the US, waiting to see what the Fed are going to do, what they're going to say. They don't say anything. They never say anything. They never do anything. This doesn't ever go where they want it to. And it's never massively different. It's slightly different, but it's not quite enough. You know what I mean? It's just we're getting to the point now where it's, when is it going to happen? And I don't believe it's ever going to happen. We're just going to be sitting there with a neutral US dollar for the rest of our lives. Just doesn't seem to be moving, does it? So if you're worried about it or you've got profit, take it. So if you've got any CAD positions on, like I've got US dollar CAD shorts at the moment. I mean, there's only 2 positions on it, so I'm not going to do anything with it, but that's US dollar as well. But if you've got any other CAD positions on, New Zealand CAD, I'm out of that long. Pound CAD, I've got shorts on. I mean, it's not going to get down to target because it's 225 ADR, but you know, it could go either way. So if you've got profit, take it. If you haven't got profit, you can't take it. If you want to scale out of it because you're worried and it doesn't go against you, you've just taken a loss for no reason. There's no right or wrong answer to getting out before news. What I tend to do, though, is I will always try and bank profit before news because you can't get it back. Look at that. So potentially a good-looking short on that NASDAQ. What a waste of time this is. Look at that initial. Look at that last hour. All within that range. Look, it's just... Hey, anybody spot a pattern? Run out of room soon? Yeah, I don't know. I'd rather live and not know. Yeah. If he is from banking background, he will most certainly use the interbanking algorithm. Or how is it called? You mean the interbank price delivery algorithm? The IPDA. Yes. He's the reason, this guy that I know that I used to trade with in my mentor group, he is the reason I know that ICT's stuff is a load of bollocks. Because I said to him about the interbank price delivery algorithm, and he looked at me with a blank face, like, the what? The algorithm that Mike Huddleston created for the banks. What? Who? That was basically his reaction. What do you mean an algorithm that controls Forex markets? Just money. We swap it with each other and it makes it go up and down. In effect, this is what he said. And I was like, so how does it work? And he was like, well, if we buy a load of it and there's not enough of it that people want to sell to us, we have to offer more money for it. Therefore, the price goes up. And when we've got rid of it all, we stop buying it. And the sellers, if there's more of them than people want to buy it, it comes down again. Says, when does it change? Well, when there's more sellers. Well, when's that? Well, I don't know. That was his reaction to me talking about the interbank price delivery algorithm. He's like, never heard so much bullshit in my life. And he comes from a bank, you know, so, which again is really good to know, because if he has no bloody clue where the thing's turning and when it's turning and how much it's going to move, what the hell do we know? And he was he was a guy that talked to the market maker desk, you know. They don't know where it's going either. They just make the market. That's their job, make the market. Yeah, here's 20 million. Brilliant. Let's stick it in there and see who wants to buy it. Let's make a market. Oh my God, that went quick. Can I have some more? Yep. That's how it works. They've got an unlimited pot of cash to move the thing around with. That's literally what we're trying to figure out how it works. There you go. It's random. I can't stress enough how important the mental game is. My brain is melting. Yep, it will do. I crap turtles. That's painful. Anyway, yeah, so RSI testing. Which drive did I put that on? So the RSI testing, basically, I've completed all the testing models. This, don't try and figure out what the strategy is by this. You can't, right? It's just a spreadsheet. But this is basically all the FX pairs tested. I've still got to test gold, silver, oil, and all indices for him. But this is basically all the testing that I've done for the various strategies and the system parameter permutations. And there's a lot of data in here. But at the end of the day, there are so many positive permutations with the exit strategies that he uses. It's almost impossible to pick a winner. It is impossible to pick a winner. But what it's telling me and him, which is what he's said, is that it just works. So the theory, if you like, is you get an RSI 2, you put it on a daily chart. Every morning you wake up, if it's below the 10, you press buy and you wait. And when you got a green P&L, you get out. You could wait until it gets to the other side of the RSI and get out. You could set a take profit of anything from half an ADR to 1.5 ADR or 2 ADR, and it will get out of that. But it doesn't matter what you pick. So the moral of the story is, and the upshot of the RSI2 strategy is, pick an exit criteria that you're comfortable with. That's it. And don't worry about it. If you remove risk reward from the equation that everybody's told you all your life you have to make money in this market, if you remove that from the equation, you will just make money, because this type of movement happens more than this type of movement. When that type of movement happens, you will lose money. When this type of movement happens, you will make money. The banks spend 70 to 80% of their time accumulating profit before they distribute the profit by making a move. Literally, the theory, the strategy is, does this more than it does that. So therefore, you'll be right somewhere in the region of 75 to 85% of the time if you just wait for the market to go up and sell it. In theory, in layman's terms, that is it. That's the strategy. And he's got 3 of these. So far, I've proven number 1 right. But what he's asked me to do is test it on Forex, which I've done. He trades indices only. And he does dabble in silver, which is why I'm going to test gold as well as silver. But so yeah, and oil as well. Because if you look at oil, and what oil does on a day-to-day basis, yeah, most of the time, you get a rally that undoes itself, followed by confusion, followed by a rally that undoes itself. That is enough to make money on. Followed by a rally that undoes itself. Yeah, most of the time. You get the odd really big move like that, losers. Yeah. But the way that he trades, if you get an ADR of movement, just an ADR of movement, even less, you will make money. It's brilliant. And oil is also a very, 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 very good thing to trade with RSI2. Test it. You can test all of this with the Position Trader EA. It does it all. Well, probably IPTA was a secret way above his pay grade. Quite possibly it was, yes. That's why he'd never heard of it. But I don't know. You'll notice how no one that is actually from a banking background that has got any sense and is in this industry has ever talked about anything to do with anything apart from random market movement and risk. The reason for that. Why was I banned from the Telegram group chat? I have no idea. I don't ban people unless they're being naughty. When were you banned? I don't know. Let me have a look at the naughty list. Recent actions. No, nobody's had anything removed for the last day or so that I can see. Apart from Habib, who tried to share a PDF about dark matter psychology. He got banned. Contact me. Is he using a stop loss in the strategy? Yes. This is why I didn't like it initially, but having tested it, it will hemorrhage cash. You will have losing streaks. Yeah, you will have losing streaks. So this, to give you an idea, this is the portfolio equity curve that I've tested. Yeah. That you're gonna get losing streaks. 32. 3-ish. So yeah, I mean, it loses a lot. It loses a lot. But it wins more. And that's the key, winning more. Yeah. This who said in this industry your job was to make more money than you lost? I don't know where people got that idea. Some bloke came up with a strategy and went, well, you've got to obviously make more than you lose. No, you haven't. If I lose $100, lose $100, lose $100, I've lost $300. If I then win $50 20 times in a row, I'm making money. Who the hell said I can't make $50 and lose 100? Nuts. Yeah. The banks don't go, let's risk 30,000 on this and it's up to 25,000 in profit. Oh, no, leave it. We haven't got over 30,000 yet. No, they take the 25. They take the money because it's there and it's available and they can spend it. Well, they can't spend it. Obviously, it's not their money, but crazy. What indices does he trade? S&P. And a little bit of NASDAQ, but S&P predominantly. If you look at the difference between, I'm just going to scroll out on these two. If you look at the difference between the S&P and the NASDAQ, there really isn't a lot in it. So in theory, you could work on either indices. But again, from a risk perspective, if you run the same strategy on that as you do on that, you're just doubling your risk. Yes, you're doubling your reward, but you're doubling your risk. So correlation is pointless, isn't it? Look, I mean, this thing went rallying up, sat around for a bit, dropped a little bit, pushed up again, dropped, pushed, accumulated. This thing rallied up, dropped a bit, pushed up, dropped, pushed, and accumulated. They're not the same, but they've done the same thing. So therefore, there's no point in trading that and that at the same time. On a 5-minute intraday basis, as you can see today, I got a clean break on this and I got hedged on this. So intraday movement is different, but longer term, intermediate to long-term movement is roughly the same because they're stock indices. They're measuring business success. If businesses are succeeding, they're both going to do the same thing, aren't they? If businesses are not succeeding, they're going to do the same thing. If the dollar is pushing, they're going to do the same thing. If the dollar is dropping, they're going to do the same thing. Yeah, so they do the same thing. So there's just no point in trading both. So he's chosen S&P. That's just because he's always used it. I really wish I had listened to him about 6 or 7 years ago when I met him. But I didn't. What is test on Palladium? Palladium? Who trades Palladium? I don't think I've got Palladium. I'm pretty sure I haven't got. I don't think I've got Palladium. Nope. I don't even know what that is. It's metal, obviously. I know that. To be fair, I don't know anyone on YouTube who teaches how to trade and has worked in a bank in the past, other than Tom. Tom didn't work in a bank. He worked in a brokerage. Nirav. Yeah, I used to clean in a bank. Does that count? I did. I'm not saying Nirav did. I used to clean in a bank. I technically worked in a bank. Think about people like, oh my God. Anton Creel. Yeah. Have you ever heard him talk about strategies in any shape or form that require risk-reward ratios? He talks purely about making money on market movement. No positive R's. Set my EAs up to trade RSI2 on daily timeframes, getting in on hourly, but limiting my exposure to only 3 trades at a time maximum. I also have the indices set up on 4-hour extensions. Yeah. That'll work. I worked at a bank for 5 years. A co-worker had a trade desk and never once mentioned IPTA. Nope, you won't. It's interbank price delivery algorithm. Yeah. Always wanted to know about dark matter theory. Well, I can tell you all about dark matter theory because somebody's posted a spam in the group about it. But it's the stuff that gets posted in there. I've got a bot that automatically removes any attachments, anything, just anything. Just because 99% of anything that's ever posted in the Telegram group is spam. The stuff I got in that folder is just unbelievable. Most of it is to do with crypto scams, but yeah. Dark matter theory, it's a new one. I don't know, never done or said anything. I don't know, Monica. I've no idea why you would get banned. If you posted something bad, you get a warning. If you did post something bad again, you get a warning. If you do it again, you get banned. If you post something really bad, like a file, you'll get banned. Really bad, like a file, because 99% of files that get posted again are TradingView viruses. I don't know. I don't ban people for unless they're being really stupid. There's a lot of people out there that are really stupid that have got banned. Not many. Rarely ban anybody manually, so it's probably an automatic. But contact me. So entries are on daily, yeah. For a stop loss strategy, that's an amazing profit curve. I know. The reason being is because the strike rate. The strike rate is so high. And do you know that there? That massive loss, the worst time it ever had, ever, that was COVID. You remove COVID, you remove March 2022 out of the equation, you probably have to remove the recovery from COVID as well. But if you look at the equity curve there, that's really what it would have done. So if you take it, I mean, you can't say the pandemic didn't happen. If the pandemic didn't happen, it would have been even better. The pandemic did happen. But look what it did in the pandemic. It just went, yeah, whatever. Because when the pandemic was over, banks and institutions went back to the normal thing they do, making money. And as long as they're making money, this is just hopping off the back of them making money. And it's nothing different to what I teach you every single day in here. Elastic band theory. It's just elastic band theory over a shorter period of time. What it is. It's looking good so far. But I always like to break things. I love breaking things, which is why I do lots of testing, because 99% of what I test breaks. So I will find a problem with it. Although I haven't been able to so far. So anyway. Forward testing will probably prove me wrong. That's where everything tends to go wrong. When you, I've got some really good strategies that I've built, developed, tested, or other people's I've tested, and they look really good in backtesting. You stick them in a forward test, they always blow up. So the forward test will be the Achilles heel. We'll find out if that actually survives. I have actually got it running on another account at the moment, which is doing very well as well at the moment. But that's running on a demo. If prices between up down ADR measurements, you do not enter until one side is extended over, let's say, 125% and more. So if price is between the up down ADR measurements, you're talking about ADR reversal strategy, yeah. So ADR is all ADR is the average daily range of movement on the instrument. Yeah, so this thing on average moves that far. Yeah. So when something goes beyond the average price, like euro pound today, yeah, it will struggle to go much further, because it's all elastic band theory is, and whether you use the relative strength index, the MACD, the stochastic, ADR, whatever you use to measure movement, all it is movement. Yeah. If something on average moves that far, if it goes beyond that, it's abnormal. Yeah. So what usually happens if something's gone beyond its normal movement is it pings back a percentage of that movement. What we can never know is whether it will be at 100, 125, 150 or 175 ADR. We also cannot tell how far it will ping back. But what we do know is the probabilities. So with ADR, the probabilities of price staying within its average daily range are 58%, which means that 58% of the time, yeah, over half the week, it won't go beyond what it does on average. If it does go beyond what it does on average, the odds of it going further drop. So the odds of it going beyond 125 ADR is 23% historically over 20 years. Yeah. The odds of it going beyond 150% of ADR are 12%. So we've now got roughly a 9 out of 10 chance of it not going beyond that level. So that puts the odds in your favor of it doing one of two things: sticking sideways and going nowhere, or flagging, or reversing. Yeah. So it doesn't mean because it's got extended, it's going to do that. What it means is it's got extended and it's going to find it very hard to go much further. But it could do that. And then tomorrow it could do that. But it could also do that. So all we're looking for with a system or a strategy that uses mean reversion is we're looking for extended movement, which is what these dashboards are for. Yeah. So the ADR dashboard tells you when something is moved beyond its average daily range. It's moved. Yeah. Because we cannot find out when something is going to move, by the time we've identified it's moved, it's too late. We've missed it. So what we can do is, after something's moved, is get on the reversal for that move. Yeah. So all the market ever does all the time is go up and down. Yeah. As John Wick says, there's only two things it's going to do, right? It can only go up and down. It's a binary market, buyers and sellers. It can't go sideways because that is nothing. That's no orders. It's buyers and sellers. So it goes up and it goes down. So when the market has gone down, it will go up. When it's gone up, it will go down. When it's gone down, it will go up. When it's gone up, it will go down. When it's gone up, it goes down. Sometimes it does that. Yeah. 58% of the time, we don't do anything. But after it's gone up, we get in and it comes down. Look at these trades. It pushed up. Right, let's look at all of them actually, because this is a good example. Yeah. So the market pushed up really hard. We got extended on RSI, or you could have taken an ADR reversal. I got in and it came back down again. As it was coming down, you had an opportunity to get in long. You could have got out on that. Then it pushed up. So I got in short, it came down. Then it pushed up again. I got in short, it came down. Yeah. So all ADR is showing you is the odds of it extending beyond its average daily range. It doesn't mean it's definitely coming down. But if it's gone beyond its average daily range, it's exhausted. The banks are long. To get out of those long positions and put profit on their P&L, they have to sell, which means reversing that position, which is why you get a push and a pullback and a push and a pullback and a push and a pullback, which is what we call market structure. So all we're doing is we're waiting for the push. We're getting on the market structure reversal. Wait for the push, get on the market structure reversal. This you can't time, because this could pull back to there, 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 or there. Think of a Fibonacci. Where's it going to stop? 23, 38, 50, 61.8, 71.9? No idea. But what I do know is if after it's gone a long way in one direction, it's probably going to come down. So I'll just get on the down move, which is what ADR helps you to discover. But average daily range is different on every instrument, which is why we have the dashboards. Yeah, so they tell you what the average daily range in pips of the instrument is, how far it's gone based on the average daily range, and the relative strength index tells you how far something's been pushing over a period of time. If it's exhausted, it will revert. All you need to know. You can't time anything. You can't tell the direction of anything. This thing is extended way beyond ADR. ADR on this pair is 59. That move from there to there is 165. Yeah, that's nearly 300 ADR, isn't it? 6121. It is pretty much 300 ADR over a period of 2 days. That thing's really extended, and it's even lower now. So the chances of this pinging back are higher because the banks and institutions are more extended. The more extended they are, the faster they will take profit. This is something I say in here all the time, which is climbing up the stairs and falling down the elevator shaft. Yeah, the market takes ages to go up. It comes down and undoes the move very, very fast. That took 48 hours. That took 2 weeks. Why? Because they're building a position, building a profit. And as soon as they start to take profit, the rest of the banks see their P&Ls drop. So what do? They also take profit. And everyone else sees their P&Ls drop. What do? Take profit. A fire sale. Yeah, which is why the market does that. And it also does it in the other direction. Yeah, climbing down the escalator that's broken and getting on the bungee trampoline. Yeah, that's ADR. An American female trader on YouTube trades palladium using trend lines. Yeah, it works for her. Do you know why it works? Because trend lines are 100% discretionary and nobody will draw them in the same way. And all she's really doing is trading Fibonacci. All a trend trader is a Fibonacci trader. Yeah, in another form. Yeah, so let's think of another way to sell someone a course. Let's stick a trend line on there and say, when it comes back to that trend line, buy it. What, you mean the 50% Fibonacci retracement? Oh, yeah. All the same stuff. Everything you see on YouTube and every course is the same thing, just described in a different way. No, you put it on the bottom of the wick. Do you? Okay, well, some people put it there. Other people will put it like that. You know, it's completely discretionary, trendline trading. The only thing that is not discretionary is support resistance based on weekly and monthly movement. You cannot deny everybody in the world is looking at that level. Everybody in the world is looking at that level. Everybody in the world is looking at that level because that is the same for everybody. Something you draw on your chart is you. Therefore, it works for her. But you try and replicate what she does. She'll come onto her live stream and go, hey, everybody, you seen this beautiful trend line? You go, shit, mine's like that. Okay, I'll adjust it like that. Why is hers right and why is yours wrong? Discretionary. Can't have a trading system based on trend lines because no one will draw them the same. No one will have the same data. This wick here on my broker, the wick on your broker is there. So your trend line is there. My trend line is here. Same system, same strategy. The price is half an ADR different that you should be buying. Can't use it. You can use it, obviously, but you have to understand that it's completely random and discretionary. So you can't backtest it because it's random. You learn that after trying to trade trend lines. And you also learn, and there's loads of theories about trend lines as well, that banks and institutions are watching them. So every time it comes back for the third bounce on a trend line, it fails. Why? Because the banks know about it. They know you've put your stop loss there, so they come and grab your stop loss. They don't even know you exist. It's $7 trillion a day that goes through this market. The retail traders with their 100 million in there don't even factor. We're not even on their shoes. I said that wrong. Normally it's a piece of poo from a fly on the bottom of your shoe. That's how small we are and significant compared to the banks. Do you use weekly range? Yeah. So the ADR dashboard also has a column for average weekly range and average monthly range. Same principle applies. If you hit the weekly range of an instrument within 2, 3, 4 days, you know that it's extended. If it's extended, it's likely at some point to have a pullback. Same with the month. If you hit the average monthly range of an instrument within 2 weeks, it's extended. It's likely to pull back. Yeah. So the same principle applies. It's all to do with movement of orders, basically. There is a limited amount of movement banks and institutions can do in a day because there is a limited amount of people that are willing to transact with them in a day. Yeah. Unless there is something special happening in the market or a reason that they need to make a move. So if I've got a order desk when I come in the morning and my order desk has got 25 million in orders to execute on a Forex pair, when I've executed those, I will stop. And you will find most days on most banks, you won't find the orders on the desk being much different, which is why we have an average movement. Because that's just banks doing business. And they don't suddenly come in one day and go, hang on a minute, we've got 25 trillion today. Or yesterday was 2.4 billion, today is 900 billion. And today is only 5 million. Yeah, it doesn't go like that. There's an amount of money businesses transact on a daily basis, which needs to be done. Just business. That's why we have average movement within markets, specifically in Forex. But it applies to all markets, doesn't it? What's the difference between the dashboard and the ADR indicator? The ADR indicator draws on your chart. The dashboard monitors all pairs and just displays it in that format. No difference at all. This is just a line. So when this hits that line, that lights up. If it hits that line, that lights up. Obviously not on that pair, just all this. Look, so euro pound has hit 175 of ADR. So if you put the euro pound pair on, there is the 175 ADR. So all that is a visual representation of what you see with the lines on the chart. It's the same thing. This just monitors everything. So if you want, you can use either. But obviously with dashboards, the whole idea of dashboards is that you don't need to do anything. That's why they're there, because you can sit there and if this thing doesn't light up, you don't do anything today. Because if your strategy is that you wait for it to get to 125 ADR and then you mean revert it, if nothing hits that, you don't do anything. Whereas if you don't use a dashboard, what you have to do is every hour, you have to go and flick through all your charts and see if anything's hit ADR, which is very time consuming and means your computer 24 hours a day. Whereas that thing will just ping you an alert. I normally get banned for saying stupid things. That's why I tell myself, shut the front door and don't comment. Yeah, well, there's no such thing as somebody saying a stupid thing. The only reason you say something stupid is if you said it before. So if you ask a stupid question, it's only stupid because you don't know the answer. When you've been given the answer, if you ask the question again, you're stupid. There is no stupid question unless you ask it twice. Which is why I answer the same question over and over again. Which is why I try to create videos that answer those questions so I don't have to continuously talk. Apologies for spamming my questions. Just seen this strategy on Friday and was able to use it successfully on 4 pairs today. Cool. Yeah. So the ADR strategy that I teach in the bootcamp. So there's 2 ADR strategies. The one that I so much teach, but the one that I show on the ADR reversal indicator is a stop-based strategy. So it's very similar to pivots, but it uses average daily range of an instrument rather than pivot points, which are calculated in a random, much more random way. And there's multiple versions of pivots, which means they're all discretionary. Yeah. ADR is ADR. It's the average daily range of movement of an instrument over a period of time. Everybody sees the same thing. Yeah. So you can use it with a stop loss or not with a stop loss. If you say I'm going to take 125 ADR reversals, you put a stop loss above wherever that 125 reversal happens. If you get stopped out, you get stopped out. It will come down some distance. It could do an A-shaped recovery, or it could be the high of a market structure shift low. You don't know. You've no idea how far it's going to go. The way that I use it, and I teach in the boot camp, which is there, is for position trading. So if something hits ADR and you take a reversal using the market reversal alerts indicator or another signal indicator, and it then reverts, it doesn't mean revert and it pushes back up again, you can take a second entry and scale into a position. But there's no right or wrong. Some people like to use stop losses. They tend to pull their hair out and give up trading, but others don't. Trying to figure out how to build some sort of retirement account with dividend stocks. I have no idea. I don't do dividend stocks. Played around with RSI2 and moving average, but it's like a big mess. The trouble with stocks is stock movement is nothing to do with a moving average. Although there are courses out there that will tell you that until they're blue in the face, if a stock has a negative earnings report, that means nothing, that moving average line. Yeah, so if you put a stock, and pick any stock that has done that and has a moving average going like that, if the earnings don't come out very well, it'll either do that or that. That moving average means nothing. A stock index, on the other hand, which is what the original RSI2 strategy was developed for. Yeah, a stock index is manufactured to go up because it tracks the top, in this case, 100 stocks in a sector. And the reason they are manufactured to go up is when that stock sitting at spot 100 makes less money and starts to lose its stock value, it drops out the index and is replaced by a stock which is performing well. So all this is showing you is all the stocks that are performing well. So it's obviously not going to go down, is it? So therefore, a moving average is useful because it's showing you what the average price of the top performing stocks that are always going to continue to perform are. And if they don't continue to perform, we'll get rid of one of them and replace it with one that does. Never ending rise, which is why all these stock markets that were trading at 2,000, 3,000, 10, 20 years ago are now trading at 18,000. And they will in 10 years be trading at 25, 30,000. And in 20 years, they'll be trading at 30 and 40,000 and so on, because the stock prices will not go down as long as companies are performing, and it only tracks performing companies. Why Warren Buffett does nothing but buy the S&P 500. On average, over a decade, you will receive an 8% return per year, regardless of what happens in the world, because stocks will always return. Yeah, you're going to have down years. You might have a loss year and a loss year. We've had a loss year recently, haven't we? We've just had a loss year on the S&P 500. What we call a bear market. Yeah. When did we last have one of those? We've never had one that big ever. But last bear market before COVID, 2018. Don't get them very often. 99% of the time, just goes up. So if you get an RSI2, stick it on the S&P 500, and every time the RSI2 gets below 10 and you bought it, and if it stayed below 10, you bought it again, and stayed below 10, you bought it again. When it went up, you sold it, you would make money. So if you're looking for a way to have a retirement fund, that's the way to do it. And that is the strategy that I published on here, which will take forever to load because my website is slow. Which is this strategy here, the 15-minute scalping strategy for the market reverse alert EA. Yeah, so literally you just buy RSI extensions. Yeah, and you just position trade them, because if an index is designed and manufactured to go up, it's going to have dips like this, which will last a week, 2 weeks, but you just buy them all. You've heard the terminology, buy the dip, sell the rip. What Warren Buffett's been doing his entire life. He's the most successful investor on the planet ever. What does he do? Buys the dip. Nothing but. That's it. That's all he does. Why do you think my man in the bank trades the S&P 500? But you're limited to this. This is the problem. There's very few instruments on the planet that do just this. Forex is much more random, isn't it? So a lot more difficult to trade money. There you go, ADR, Euro CAD. Good looking level there as well on the Euro CAD. Triple weekly low. If it breaks this low, however, which the euro being weak potentially could do, you might have a bit of a drop on your hands, but we'll see. Do you know when he's going to put up the new website? No. No. And I would also say the strategies are not being revealed in detail. Yeah, he's looking to set up a PAM. It's not a PAM actually. It's more of an investment fund. But he will be selling EAs to trade the strategies, but not going to reveal the strategies. You might be able to work them out, I guess. But if all the strategies are revealed in detail, immediately it's all going to be free on YouTube, isn't it? So there will be products available that trade the strategies. A little bit like a signal service, but I've told him that's pointless, and he knows that. He's not going to do that. Bad name, signal services. My first time here, very educational, logical, good. Check out my training programs, yeah. So basically watch the position trading bootcamp. That's the one to watch. That teaches you basically how the market moves, why it moves, and how you can extract money from it. But there's obviously pitfalls in doing it that way as well. So you just need to watch all of it and learn and just do. Go and do, more importantly. You can teach as much as you like and become an expert in everything, but knowing and doing are very different things. Look at this, NASDAQ. NASDAQ's broken back out the highs into the pre-market high. So we're back up at higher day, getting rejected. Close. So I'm closing out my longs at higher day on the NAS. Got some rejection coming in there. I get the feeling because it's FOMC tomorrow, markets are going to rotate. So a bit risky, but I'm only risking it because I've banked today. So I might have to re-hedge that if it goes too ballistic. We've also got yesterday's high coming up on the NAS. Yeah, so that's yesterday's high. So we've got today's high and yesterday's high. So we've got limit orders, which looks like they were triggering there, but now it looks like they're pushing through. We're probably going to have limit orders triggering there. We've got weekly high there as well. So there's that whole zone basically is full of sell orders. So try and get out on a drop. Right. So that's my plan. If that gets back up above that weekly high, I'm going to re-hedge that, which will be annoying, but hopefully we'll just pull back. So day before FOMC, we either get a big day and big movement or we get rotation a lot of the time, and say the same on FOMC day as well. Obviously we don't get a lot of movement on FOMC day, However, tomorrow will be slightly different because we've got CPI numbers coming out in the morning as well. And sorry, in the afternoon. So tomorrow, if there's no, well, I won't be trading the indices tomorrow because most of the volume will probably be gone by the time the market opens at 2:30 because it's 1:30 for the news. So tomorrow we've got GDP in the morning for the pound. Then we've got CPI numbers coming out, and then we've got FOMC. So tomorrow I'm going to do a morning session and just do a complete analysis of all FX pairs. Look forward to CPI numbers and just see where we are with everything. The CPI numbers tomorrow, I think you'll probably find will whipsaw the market, but won't move it until we get FOMC out of the way. So we'll have a look at all of that tomorrow morning, but it's obviously going to do what it needs to do. And there's absolutely no plans for the Fed to change anything tomorrow. And it's very, very unlikely they will. So what we're looking for tomorrow is either a catastrophic hit or miss on CPI, or for Powell to tell us something about what's going to happen with the dollar over the next quarter, which at the moment we are not getting anything concrete at all, are we? But if we've got a decent CPI number here, so if that CPI number, we've got a forecast of a 0.2% drop on the monthly and yearly to be the same. If that annual number comes down a decent percentage and we get a miss on the CPI, it might give Powell confidence to say that there's a good chance of a drop coming, in which case we might get a drop in that US tomorrow. But if we get forecast numbers, I suspect we'll just do that. I think we probably will, but we'll see. So it's all about FOMC this week, which is tomorrow. Euro CAD just stalling out on that monthly level. That resistance and support. Or it will break and we'll be coming back down somewhere around there. That is part of that news V shape there, so you can ignore that. Next stop could be, there's just so many, this is a huge accumulation, so it could be anywhere down there if it breaks. But good looking opportunity for a long. That is also extended on the hourly pretty much as well, so we're just about to get an hourly RSI extension. You see what I mean about the just before I go, using the 9010 RSI 21, yeah, and it's very rare you're going to get it. It doesn't hit it very often. EuroCAD's probably not the best, but you're looking for the RSI to get up to these levels and down to those levels. It doesn't get there very often. Even an 80, look, 80-20. We've only had 120 so far this year, which is there. Just not going to get them very often. I'm just trying to find one. But it's the holy crap level, basically. So I'm not expecting to get any hourly signals on that FTMO account. But on the 4-hour, 80-20s, yeah, much more prevalent as opportunities. So that one there, that one there, that one there, that one there. You'd have paid money on that. That one there, and that one there. That's it. But pretty much 100% strike rate. That's why I'm trading those. But I'm not expecting to get many of them. So this is the thing with evaluations. You just got to be patient with them if you want to actually pass them and make money with them. But you're still not going to hold them. You will at some point blow it. Yesterday's high has just been breached on the NASDAQ. Look at that for a parabolic move, though. I mean, there's a high probability of some kind of pullback on this, and I suspect a rotation today. So still a good looking short opportunity. You got that weekly high coming up here. So limit orders, doesn't seem to be any there. Hopefully they're going to be sitting there. See. Right, I'm going to leave you there. Anything you need, let me know. I'll be in Telegram or Discord. I'll be back tomorrow at 8 a.m. and then on Thursday afternoon. So we'll do New York Open again Thursday afternoon. And obviously we'll have a look at what's happened with FOMC and see what impact that's likely had on the dollar, if anything. I'm not expecting a huge reaction, but we will see. So yeah, anything you need, let me know. I'll be in Discord or Telegram. Other than that, I will be back tomorrow morning. All right. So if you can't make that one, I will see you on Thursday. Have a good day.